Hi everyone, welcome to the Mighty Trades channel. My name is Johar, and over the next 60 minutes, we are going to be analyzing some of the stocks listed on the National Stock Exchange. Just a quick disclaimer, please do not treat this video as a buying or selling advice. This is only for educational purposes. Please do your own due diligence before taking any positions in the market. So the tools that we are going to be using in this video are just a free TradingView account, the screener website to do any fundamental analysis that we want to, and we are going to be recording any positions that we feel can potentially give us a gain in this Google Sheet. I will link this sheet in the description box, so you can anytime open the sheet and check what positions we have identified and what results those positions have given. Just going to quickly talk about my chart setup. The only thing we are going to be looking at is price, volume. We're going to be looking at weekly charts primarily to do our analysis, and we will change the time frames to daily or monthly if needed. We will also look at moving averages in certain places. So I have three moving averages here, which is the 50-day moving average, 100-day and 200-day moving average. So we will use that also whenever required. For now, I'm going to hide it. So without wasting any of the further time, let's get started. So obviously we will start with Reliance first because that has the highest market capitalization, and we will keep going down by market capitalization accordingly. So I'm going to quickly change this to a 5-year view. So Reliance is not a trading stock, right? It's an investing stock. So I believe it has corrected quite significantly here. If we just check the price range, this has corrected by 15%. So it's a good time for any investor to take a position in. Same thing goes for Infosys. It has corrected quite significantly. It has now come down to a pretty strong support. However, if this support is broken, then there is nothing stopping the stock from falling down to 1500 levels. However, this is a good price to invest in the stock if you need it. Same thing for HDFC Bank, good stock to invest in. ICICI Bank is very strong because if you look at the HDFC Bank chart, this has corrected quite a bit from its all-time high. However, ICICI Bank hasn't. It does seem to have made sort of a double top position, but for any investor, you should continue sticking with the stock because I believe this will outperform HDFC Bank in the future. HDFC Bank, good time to invest. TCS has also corrected. Kotak Bank's corrected. L&T has been in a perpetual uptrend since the COVID fall, so there's no trading opportunity per se, but if you want to invest, you can. ITC has not been moving at all, but if you are someone who wants dividends, then you can go ahead with the stock. Bajaj Finance, good time to invest. Hindustan Unilever is at a very good price to invest right now. State Bank of India is extremely strong, and it has a very long consolidation behind this. If you look at this price, this was made in 2010, and this price was finally broken in 2021, so there is close to 11-year consolidation behind this breakout. So clearly there is something happening in the stock, and it can potentially give you massive returns in the long run. Wipro has fallen down very hard. It's trading at a support. However, if this is broken, again, there's nothing stopping the stock from falling down further. So if you're a long-term investor, you can start buying the dip right now. However, there's no trading opportunity per se. Bharti Airtel has also broken out after a very long period of consolidation. If you look here, this high was made in 2007 of 534, and this was broken in this was decisively broken, I would say, here in August 2021. So again, this is almost a 13-14 year long consolidation that it has broken out of. So clearly there's something cooking here. Also, I believe there's some news of a investment by Google that was done in Airtel recently. So that can also be a further cause for, price movement in the future. HCL Tech has corrected. This has also made a sort of a double top M pattern here. Again, it's trading very close to this resistance line, which should act as a support now. But if this support is broken, nothing is stopping the stock from falling to 800 or below levels. So good time for investors to step in and buy the dip. However, there is no trading opportunity that I see. Asian Paints is again another stock that has been in a perpetual uptrend. If we go back all the way till 2009, the stock has just been on an up move. So it's a good time for investors to start buying the dip. DMart has corrected very significantly from a high of close to 6,000 to 4,000 rupees. So I really don't follow the DMart business model, so I can't comment on the stock. But if you're a long-term investor and you want to build positions, doesn't that wouldn't be a bad idea. Bajaj Finance corrected. Maruti. Okay, now this chart looks very interesting from a trading perspective right here. So let's try and mark some trend lines. So if we look here, if we try and draw a line here, this resembles a very good head and shoulder pattern. So this would be the left shoulder, this will be the head, this is the right shoulder. So an inverted head and shoulder pattern for sure. And this has decisively broken out the last week, and it has also given a close above this resistance line. So that is a very important point to note here. And this pattern has been in the making since December 2018, and it's been broken in 2022. So this is 2019, 2021. So there's a 3-year long consolidation that is breaking out of. So if you want to calculate the upside of this head and shoulder pattern, we can go up here. If we just put this here, okay. So this is the potential target that we are looking at. So a 40% gain from the current market price. Let's have a quick look at the fundamentals of the company. So if we look at the quarterly results up till March 2021, the results were on a uptrend. However, since 2021, the results have been, especially in June and September, the results were a little disappointing. But I believe this was because of the chip shortage that was going up all across the globe, and the higher input costs because of inflation that's been happening. However, if we look at the December revenue, this is the highest ever revenue they have reported, uh, or probably the third highest revenue they have reported in so many years. Only December 2020 and March 21 was better. But this is a very good revenue number. Margins have also improved. I guess all the price hikes that they were doing over the last couple of months have paid off. The net profit is good. So fundamentally, the company is doing extremely well. Obviously, Maruti Suzuki is the largest car brand in India. There's no doubt about that. Let's have a quick look at the shareholding pattern to see what's happening here. FIIs are definitely increasing their position. They have bought almost a 1% stake in the December quarter. DIs have pretty much maintained their holding, and there's very little public shareholding. If we look here, the Kuwait Investment Authority Fund has just bought 1% stake, so that is definitely a good sign. So I think this is a pretty good trade that we should take, and it's not a bad idea to buy it at the current price as well. So let's put in Maruti over here. So the price as of today is 8550, 5095. The target that we have calculated as per the technicals is coming to 11,926. So 11,926. So that's a gain of 39.45%. The current market price is 8537.15 on the NSE website. The current average price is 8537.15. Um, the entry price, we are going to keep it same. Okay. Now what is going to be a stop loss? Stop loss is a very subjective thing depending on your risk to reward ratio. However, I try to keep uh, at least a 1 to 3 risk to reward ratio. So for me, ideally, my stop loss would be, let's see here. I believe you'll have to keep a wide stop loss here. So 7,000 rupees looks like a right stop loss for me right now. So the potential gain that you could make is 40%, and the potential loss you could make is 18%. However, we have to understand one thing, that this is Maruti we are talking about, right? Even if this position does go in loss, I do not believe uh, that you should book the loss, because this is a fundamentally very strong company. It is bound to come up, and booking a loss in this would be a very bad idea. So what did we identify? We identified a inverted head and shoulder pattern, and on the basis of that, we have taken this trade. Okay, there we go. So this is a trade that is currently active. I will attempt to buy this tomorrow. So we're going to put a buy date of 31st January. So all of this will get auto calculated. So let's say if we were to exit this trade on, let's say March 1st, or yeah, March 1st, this trade would last for a period of 29 days. And then depending on what price we exit at, we would get to see what was the gain or loss that we got. So currently it's showing up as 100% because I'm taking it here. So I'm going to remove this formula. Okay, there we go. So let's move on. And guys, if I'm moving too fast, then please feel free to, rewind or pause the video in the middle so that you can analyze the chart yourself. I'm going to switch back to a weekly chart right here. Move ahead and go on to Titan. So Titan again has made a sort of a double top patterns. So again, this is a good investing opportunity to buy the dip. However, I don't see any trading opportunity right now. Ultratech Cement has made something called as a triple top, and one good thing is it is at a support price. Its previous resistance is acting right now as a support. It's taken support 3 times here. Let's quickly have a look at the moving average to understand what's happening. Okay, so the price has gone below its 200-day moving average, and it's at a very critical support level. So until unless we see a strong reversal here, I don't see any trading opportunity. Ideally, the price should have taken a support at the 200-day moving average and maybe created some sort of a bullish pattern, like for example this dragonfly doji that we are seeing here. There's a dragonfly candle, and the moment this dragonfly was done, we saw a gain of 15% in a span of less than 2 weeks. However, this time nothing similar has been repeated, so currently this is not a great trading opportunity as of now. Moving on to Axis Bank. Axis Bank recently came out with some stellar results, and if we again drop a neckline over here, you can sort of see maybe a inverted head and shoulder, or you can think of this as a cup with handle pattern. But in any case, for me, this would be the technical target from this neckline all the way to here. So from the current market price, this is a gain of close to 70%. And this stock has been testing this trend line since 2019, right? This was the high made in 2019, came here, attempted to break it in February 21, failed, went back up here, and then in October, as you all know, the FIIs heavily started selling. So clearly nothing was safe from that. So this stock also fell, and now I believe it's trying to make another attempt to break out from here. So if you want to take a little bit of a risk right now, you could potentially buy the stock. We could potentially enter the stock tomorrow itself and take the trade. But if you are a bit more conservative, a bit more safe, then you should ideally wait for the stock to give a closing above this level, which is 873, which is the previous high, which it was unable to break. So I think this was a good trading opportunity, and even from this level, the potential gain that's coming out is about 48%. That's not a bad trade, and your stop loss would be this low, which is 624. So let's plug that into our sheet and see what risk reward ratio we're getting right here. So we'll take Axis Bank. This is the date we identify the stock. The price is 764.70. The target that we are getting is 1296. That's the technical target. Potential gain is that, which is about 69%. ₹764. Now, if we were to wait till it broke this line, 874, that's when we would activate this trade, and our stop loss, according to me, my comfortable stop loss would be 621. So the potential loss that you could get here is again 18%. Again, what did we identify here? We identified an inverted head and shoulder pattern that is close to a 2-year plus long consolidation. Consolidation behind this. Good results have been announced in the last quarter, so that's also a good thing. All right. Is this trade active right now? No. This trade, we are going to wait for it to cross the target entry price, and then we will enter this trade. Okay. Adani Green, wow, that's a beautiful looking chart. And the weekly candle is also extremely bullish. It's made a dragonfly pattern. However, I personally stay away from Adani stocks because they have run up way too much, and I really don't know for how long they'll keep running up. Also, if you remember last year around what was this time? I believe it was around this time only in the month of May when that news came out about Adani Group stocks and some FIIs rigging the stock price. Since then, I have tried to stay away from the stock. Um, so yeah, if anyone else wants to take a shot at it, the chart looks fantastic, but I personally will not enter the stock. Okay, Sun Pharmaceuticals. Now this chart does look interesting. Let me switch over to the monthly chart over here because this is something we called as a rounding bottom that's happening here, and it's been in the making since pretty long time. Just look at this. This is a massive rounding bottom all the way from 2015, and it seems to be on its way now upside. So clearly the downside trend that was happening in the stock, if we draw up a trend line this way, so this was clearly broken in the month of July, and it's been slowly on a pretty good uptrend, consolidating for a couple of months, then moving up, then again a 3 month consolidation, moving up, a 2 month consolidation here, moved up by 15%. Now it's been consolidating in this price range for 1, 2, 3, 4, 5, 6 months now. This is a 6 month consolidation period that's happened. Let's quickly go and see if we can see if this is an accumulation happening in the share pattern or not. So this consolidation began in the month of August. Okay. Alright, so there is clearly some accumulation happening here because if we see here, it was in the month of June till June, the FIs had 11.5% stake. Then from July, August, September, they acquired 0.5% stake more, bringing it to 12. And then in October, November, December, they acquired another further close to 1% stake here, 13%. Uh, so while FIs have been increasing their positions here, the domestic institutions have been selling their holdings. One good thing is that the public shareholding has dropped. So that is a good thing. The public shareholding has not increased here, and whoever this HNI is, Lakshadweep Investments, they have also maintained their holdings in the March 21. So definitely there is not a distribution happening. There's an accumulation happening where someone is actively buying the stock, which is taking the share price up. So this is definitely a good bet. So let's put on our trading hat here and go over to the daily chart pattern. Let me also put in my moving average. Okay, so the price is currently above all the three major moving averages, which is 50, 100, and 200-day moving average. It does seem to have a strong support trend line this way. Let me hide this moving average again. So if we try and connect majority of the lows here, if you see here, this was a low, came back, bounced here, broke this low for a little while, but immediately bounced back, came very close to the trend line, bounced back, again broke the low here for a little time, bounced back, and now it's taking support again from here, and it's bouncing back. Our aim should always be when drawing trend lines is to try and join as many of the lows as possible, because that will give you a much more clearer picture. And clearly what we can see here is that when this trend line was broken, if we take for example this price here, let me zoom in on this chart for you guys. So this was the candle that broke this trend line. So we'll take this high, this opening price here, and we'll take the low. It went down by about 4.74%. The next time it did this with this candle, so we'll take this high, went down here by again close to 4.7%. So for me, the ideal stop loss from this for this stock is whichever candle goes to break this low. So for example, if you look at this candle, which had momentarily crossed this trend line here. So if you look at this high, I would ideally keep my stop loss 5% below the opening price of the candle that is breaking the low. So that would be about 765 rupees. Because this is a clearly established trend line uh, from November 2020. So this is not a small trend line. This is a trend line which is more than a year long and it's been respecting that. So this definitely looks like a good trading opportunity to me. So I'm going to add this to my list. The current price as of this date is 827.35. Now what would be the target here? Let's see. If you look at the all-time chart, as per rounding bottoms, usually what happens is the target is the all-time high. So from current market price, if you look at the all-time high, that's a 44% gain. So that's 1200 rupees. Let's do one quick fundamental analysis to see how the company is performing. Okay, this high was made in the year 2015, on April 2015. So if we look at their results, if you look at March 2015, their revenue was 4,539 crores. And then that remained stable again, then it went up to 7,000, and here it has dropped to 2,000 crores. Now why has that happened? I don't understand. Revenue has dropped, expenses have remained the same, but profit margins were there. I think this has something to do with the tax amount here, because all of a sudden the tax has gone up 26%. However, the profit before tax also fell. So I'm not too sure what happened here. The margins also clearly dropped. Uh, but alright, let's not dwell over that right now. But if we look beyond again, in March 2020 things improved. Their profit before tax came back to 5,000 crores. And right now the trailing 12-month profit before tax is 7,000 and their net profit is showing up at 6,238 crores. So if you look at the recent results of that quarter, the month of September, they have posted their highest ever net profit in the September quarter. And if they are able to replicate the same results in the December quarter as well, I think that will be the highest ever net profit again that they will be posting. So one very simple analysis here that you can do is, and this is a philosophy by Ray Dalio, who is a very famous investment banker out in the US. And his philosophy is that if a company is posting its highest ever net profits, but the stock price is quoting at the is not quoting at the highest net profit, then eventually the fundamentals, the price will catch up with the fundamentals. So going by that philosophy, Sun Pharma is available at a price where it was trading back in 2014. However, the net profit is not at 2014 levels. It's gone way above that. And keeping that principle in mind, fundamentally, this looks like a good buy. And technically also, it's in an uptrend. The stock is in a good momentum. So I don't see why we should not be taking a position here. And for the stop loss, as we have discussed, it should be 4% below this trend line. So if we keep our current buying price as 828, and this is the low of the trend line right now, 800, I think we can keep the stop loss around here, which is about 730 rupees. That's a good stop loss. Again, this is a fundamentally strong company, so I do not believe in booking losses too often, especially in fundamentally strong companies. However, since we are traders and we're talking about trading, so we are just going to keep a stop loss here, uh, just to, uh, just to refine our methodology. because at the end of the day we want to focus on the chart setup and the charts technicals to refine our trading methodology, and that's the whole aim of this YouTube channel. All right, so the target, as we had discussed previously, is 1198. So the potential gain is 44%. Current market price is averaged at 829. We are going to keep the target entry price same. The stop loss, which we had discussed, was this low, so 732. So the potential loss is 11%, but the potential gain is close to 45%. So that's a good risk to reward ratio. And what did we identify? Rounding bottom since 2015, highest ever quarterly net profit, Ray Dalio principle. And this trade is sorry guys, that was a mistake here. And this trade is active. We're going to keep tomorrow's buy date. All right. Okay, great. So let's move on to the next stock. Again, Adani Group stocks I avoid. ATGL also is in a strong uptrend, but I'm going to avoid this. Adani Enterprises is in a strong uptrend, but again, I'm going to avoid this. ONGC. Okay, now this looks like an interesting chart setup. The volumes are significantly high compared to anything that has happened in the past. So that's one good indicator. Stock has been in an uptrend since March 2020, and before it was in a downtrend. So if we draw up a trend line, like this, so it was in a perpetual downtrend since 2015, this way, as you can see, and this was decisively broken over here back in September 21. So the trend line was broken, then a retest happened and it momentarily went down, but it made a very nice morning star pattern. For anyone who does not know what a morning star pattern is, the beginning is such that there should be a downtrend, then there should be a doji candle at the bottom, and then the next candle should be a nice strong green candle, which you can see here. And as you can see, once the downtrend was identified, once a doji was made, and the next candle was a green, it went quickly back up and tested this resistance. Let's switch over to the daily chart, and if we see here, it went pretty high up, yeah, on Friday, which was 28 Jan. But I believe, with the market fall that happened in the very end, in the last 2-3 hours of trading sessions, it pushed the price down. Otherwise, it would have given a very strong closing. So this is again not a bad buying price. This looks like a very solid buying price to me. Let's try and find if we can create some sort of a support trend line. If we can make any sensible support trend line here. Okay. So if we drag this up all the way, let me switch over to the weekly chart. All right. Um, so in any case, the sensible stop loss would be 130. But let's try and see what targets we can get out here. However, I do want to confirm one thing. Sorry about that, guys. That was my phone. I do want to confirm one thing though is whether this is a government entity or not. Yes, this is a government-owned company, since the President of India has the highest holding. And if you look at the FI holding, that's been going up since March 21. They have taken a pretty big position in the month of December. Public holding has remained pretty much stable, in fact, reduced by a little bit only. Mm, I try and avoid PSU stocks as much as possible, but technically, this chart is so strong that it's hard to ignore, and the volume buildup is also pretty good here. And let's see what targets we can identify, because on the basis of that, we would be able to decide what to do. Currently, there's no chart pattern that I'm seeing which can help me identify a target. So one thing that I like to do when I'm not able to understand how to calculate the target is look at ideas of other traders. So TradingView is a social network, right? As you all know, for traders, and how you can view what other traders are thinking and try to corroborate your own methodology with theirs is by just quickly taking a look at the trading ideas that have been published by other traders on this particular stock. And how do we see that is, you see this small pop-out window here. You're just going to click on this, go to ideas, and you will see what other traders are looking at. So someone's put up a 15-minute chart of for an intraday trade. How we are not doing that. Um, let's see here. This is also nothing great happening here. Okay, let's see this. Okay, so Indian market outlook has posted an idea. 30th December 2021, they had posted this idea. So they have posted a pretty big idea right here. But as per the latest idea that he has published, this was the previous resistance that was there in the month of June, broke out, went up here, and now currently it's again on the verge of breakout. As you know, we can see here as well, it's on the verge of breaking out from this resistance. And if it does break that out, he has plotted a target of 220 to of between 214 to 220 rupees. So if you look that up, that is coming to basically this previous swing high over here. I must say I sort of agree with him. I mean, this makes the next logical target, because um, the only target that we can take is the net previous resistances. So if we were to take this trade, first target would be this, which is the major resistance. Then our second target, I mean, I don't see anything stopping this stock from going here if it breaks this high. So we can potentially take this trade. We'll have to just see what is our risk to reward ratio here. So if we do a RR calculation, from this price, stop loss would be here. The risk to reward doesn't seem too favorable, because you're getting a gain of only 27%, but your loss could potentially be 21.5%. So currently it's not worth it. However, if you want to go really long on this, then this is a target that I would want to, go for. But then this would have to be a very long term trade, because as you can see from this chart movement, if you look at the monthly chart, this is a very slow moving stock. It goes through very long periods of consolidation, as we can see here. From 2007 all the way to 2014, this is when the breakout happened, went up here, and then slowly moving down, and now it's slowly coming up. So you would have to be very, very patient with the stock. I unfortunately do not have so much patience. So if anyone wants to take this as an investment call for the next 1 to 3 years, I think that would be the right view. And since you are taking an investment call for the next 1 to 3 years, you would have to keep your stop loss at least a little wider, at least till 30%, to give enough room for the stock uh, to move about in this wide price range. I personally will not enter the stock, um, but yeah, that's my view. So please do your own due diligence and your own research, before taking any investment call here. So moving over to Tech M. Tech M has corrected very significantly, like all other IT stocks. Again, it's trading at it's come to a support level now. If this support is broken, there's nothing stopping the stock from going down till 1100 levels. So I don't see any trading opportunity as of now. So we're going to move ahead. Tata Motors, what a fantastic chart. I mean, after the COVID fall, it's just been on a humongous upward rally, and it's a beautiful chart setup. But at this point now, I feel the company is a little bit overvalued. I really don't understand why it's going up so much, because the only thing that I see is electric vehicles that is giving Tata Motors name the buzz at this point. But it's a perpetually loss making company. It's been making losses since 2019. It's been a loss, and the net profit has not been consistent, in my opinion. It makes profit, then it makes a very good profit, then it made even a better profit, and then the profit fell down. Then another year it made a good profit, and the same profit again, profit fell down, profit fell even more down, then recovered slightly. So I don't see a lot of consistency in the company. However, if you are an existing Tata Motor investor, please continue to hold on, because technically there is nothing wrong with the stock. It's consolidating nicely in this price range, and if it breaks out, I can clearly see it going and touching its all-time high and even beyond. But I think at this point, Maruti looks like a better bet to me, a more safer bet to me, I would say. So please again do your own due diligence. For me, Tata Motors is a no at this point. JSW Steel. Okay, now this chart looks interesting, and I think I've seen this chart before as well. Okay, so steel stocks have been on an massive upward rally since the COVID fall, right? They have broken, all of them have broken past their all-time highs. So JSW Steel made an all-time high of 412 rupees back in August 2018. That's been broken, and after breaking that, it's moved up an easy close to 100% from here. And now it's been consolidating in a downward channel this way. As we can see, we have connected all the tops to this trend line. I do believe that steel stocks are in for a massive rally still. So let's quickly look at the fundamentals once. And if you see, just look at the P's they're trading at. It's trading at a P of 7. ROCE is good. And as per this website screener, the intrinsic value is 1,000 rupees. Please take this with a pinch of salt. We really don't know what methodology they're using to calculate this intrinsic value. But if you look at the quarterly results, they're posting fantastic results quarter on quarter. Last quarter, their margin dropped quite a bit, but it's not dropped to as low as these 2019 levels. So let's see if this margin further continues dropping. That's something we'll have to keep a lookout for. But if you look at the share price history, this high was made in 2018 of 432, and the net profit was 6 1,200 crores back in March 2018 if you look at the March results. Now their trailing 12 months profit is 21,629 crores. This is a massive. Even if they are able to replicate a net profit of 4,000 crores for the next 4 quarters, that means they would be making a profit of 16,000 crores. That's still 10,000 crores more than 2018. So the share price has moved up by 100%. The net profit has gone even beyond 100%. So, so I believe there is still a lot more upside left, because one thing that I am seeing different on the chart is that whenever I look at charts, I always try to look at what happened on the left and try and predict what's going to happen on the right. And usually in the metal cycles, what you can see is in the last metal cycle it moved up very strongly and then very quickly moved down again. The same thing happened in the previous cycle as well. It moved up very quickly and immediately moved down again. This time, however, it has moved up extremely fast, but it has not moved down yet so much, right? It's been consolidating in a downward channel since what, 1, 2, 3, 4, 5, 6, 7, 8, 9. Since 9 months has been consolidating in a downward channel. So this is very different compared to what's happened in the past, where just in a period of 2-3 months it's broken its previous low and then it's just kept going down. So this is different. However, for us to get a confirmation of a bullish trend, it needs to break out of this trend line. And one thing if we notice is that if we look at the weekly chart here, it has never been able to close above its previous swing high. So this was one swing high that we see here on this green candle, 766 rupees. Tried to go above it, could not sustain, came down. Again attempted to go back, could not sustain, came down again. And then it made this as the next swing high here. Tried to break it multiple times here on these candles, could not sustain it, came down. Then this was the previous swing high. Again tried to break out, could not sustain it, came down. Again attempted a breakout, could not sustain it, came down. And as you can see, it's not able to break its previous swing high. So for me, the entry criteria would be: one, it needs to give a strong close above the trend line, and it needs to give a close above its previous swing high. So I'm gonna keep this as my high that it needs to break out and sustain above. So it needs to give a weekly close above this. So the candle needs to be a weekly candle that closes above this line, and that will give us a bullish confirmation trend. So we're going to take this, we're going to note this down in our sheet to keep track of. Jsw Steel, 30th Jan. The price as of today is 628.05. Now, what would be the target? Okay, I can see a sort of a bullish flag pattern here. So if we look at this trend line, if we count here to here, and we connect this low this way. So this is the pole, this is the flag. Now we are going to take the length of the pole and place it above this flag's bottom line. The potential target comes to about 1,000 rupees, which from our breakout line is a gain of approximately 42%. Okay, and if this trade does get activated, our stop loss will be this low. This will be a stop loss. So if we calculate a risk to reward ratio over here, So the gain is 42% and the loss is 14%. Not a bad risk to reward ratio. Great. Let's put the target price 1000. And our target entry price, as we have decided, will be 700 rupees. The stop loss would be 599. So what did we identify? Flag and pole, metal cycle, highest net profit. What else have we seen here? The stop loss and breakout needs to be on a weekly closing basis. Okay, so we are going to be waiting for this target price to hit so that we can enter the stock. Until then, we are not going to take any positions in the stock. Okay, moving to the next stock, we have Adani Ports. Again, Adani stocks, I try and stay away from them, so I'm not going to comment on these. Okay, power grid is looking interesting. So again, power grid has been on an uptrend since October 2020 here. Very, very strong uptrend. And again, this is a PSU stock, so I can't really say when things might turn, but it's been on a perpetual uptrend. If you are a long-term investor, then you should take it. However, I do not see a trading. I personally do not want to trade in a PSU stock. Tata Steel. Okay, so if you look at Tata Steel, this also has a similar issue like JSW Steel here. So it needs to cross its previous swing high for it to become bullish. And the moment it crosses this, this will become your first target. This will become your second target right here. And very similar to what we discussed, the metal cycles. This is again, this consolidation in this downward channel that we're seeing here is very different to what happened in the past, where it started falling pretty much immediately after hitting its high. So we need it to close above its previous swing high on a weekly closing basis to get a confirmation that the bullish uptrend has started again. Until unless we can't really take any positions in this. So we're going to note this down here to keep a track of what we're talking about. And again, if you ask me what the target would be, this again looks like a potential flag and pole pattern. So this would be the flag all the way from here. And guys, please do comment if I am making any mistakes in implementing these technical patterns. If there's someone with more experience than me, then please do let me know if I'm making any mistakes and I'll try and rectify them. So I'm counting the pole from this breakout line, and if you were to take the length of the pole and place it at the bottom of the flag, then your target comes to about 1888 rupees. That's a potential gain of 74%. The current market price is 1086, and our target entry price would be the previous swing high of 1225. So if we do a risk to reward ratio calculation from this price, So the technical target here, it's a gain of 55%, and our stop loss would be this low that it's been maintaining since a while now. So close to 15% um, risk for a 55% gain. Let's quickly look at the fundamentals again once to see if the fundamentals match to what we saw on JSW Steel. So again, net profit highest ever. Wow, this is just a beautiful thing to look at. And this high that we are seeing here again, this high was made in 2007, 910 rupees. And what were the financials in 2007? We don't have data going that far back, but in 2010 it made a loss of 2000 rupees, 2000 crores. And now you're seeing a trailing 12-month profit of 31,000 crores. That is a massive, massive difference that you're seeing here. And if we look at the shareholding pattern, you can clearly see that FIIs upped their stake all the way till here, but they have reduced their stake by close to a percent in the December quarter. DIIs have almost maintained. The public shareholding has gone up by close to 2%. There's no big public investor that we can see here. But if you look at the FIIs, they seem to be booking some profit over here, but which might be the reason why the stock price is going down. But I guess once the FI interest comes back in here, you could see some massive run up in the stock like you have been seeing in the past. So this is a good trade. I think all we need to do is just patiently wait for it to cross 1225, and once it does that, then the returns could be massive. So our stop loss will be 1040. Let me just change this calculation a little bit, because taking the stop loss from the current market price, which is not right. We should take this from the target entry price. That gives you a better picture of things. There we go. Seems to be something wrong in the formula. Oh yes, sorry. There we go. Sorry about that, guys. I made a mistake in the formula here. So this is giving you a more accurate picture of things. Okay, let's moving on. So we only have a few more minutes left for this session, so I'm going to quickly go through these stocks here. Hindustan Zinc, it's been consolidating for a very, very long time in this price range. Until unless it breaks out from this level, I don't see any reason to view this stock at all. Jsw Life corrected massively. It's at the support level, and there doesn't seem to be any bullish indication at this point for us to consider this for a trade. Larsen and Turbo Infotech, again, like all other IT stocks, has made a double top. It's making an M sort of a pattern. If it breaks this support, nothing's stopping it to fall down to 4,000. So at this point, don't see any potential trade here. Vedanta is again from the steel cycle, and as we can see, it's testing this resistance line. So we should keep this on our watch list for sure. If it breaks this trend line decisively on a weekly closing basis, I think every brokerage house is going to start recommending this. So we should definitely keep this on our watch list. Our first target would be very simply the all-time high from here, which is a 26% gain in itself. And let's have a quick look at our fundamentals, because again this is a metal stock. We should quickly see if this has the same sort of quarterly result cycle like how Jsw Steel and Tata Steel are having. Okay, so if we look at the net profit here, it's not the highest ever net profit, but the last 3 quarters have been very consistent, and it's about 4,000 crores, which it has never done in the past here. If you look at the trailing 12 months, that's 19,000 crores. So this is a significantly high net profit compared to anything that has ever posted in the past. So using our same methodology, this high was made in 2010, and the net profit in 2010 was 2629 rupees, and now the net profit has gone up by 10 times. So, sorry, yeah, 10 times. But the share price has not. So that is definitely the price needs to catch up to the fundamentals now. And according to that methodology, if we just take this entire depth of the consolidation and we put it up above this resistance line or this all-time high line, then your potential target comes to 936 rupees, which from the current market price is 180% gain. I think this is a fantastic trading opportunity. We should quickly go and see the FII holding. And if we look here, something interesting has happened is that the promoters are buying the shares here. From 55 moved to 65, stayed there, and now it's gone up by another 5%. This is a very strong sign. If the management of the company is buying the shares themselves, that shows what confidence the management has. Public shareholding has reduced, another good sign. FIIs are selling their positions, I guess. I believe the promoters might be buying their shares from the FIIs themselves. The DIIs have sort of maintained their positions over the last 3 quarters. Not a lot of big difference here. In fact, we can see who is this? This is LIC has taken a pretty big position here of 8% in the last quarter. That's a good thing. So the shareholding pattern solid, the fundamentals, the profits of the company are solid. The chart pattern looks very good. I think this is an opportunity that I cannot pass up. So I'm going to take this trade as soon as I can. So please, do your own due diligence. Again, this is not any buying or selling recommendation. I'm going to wait for this price to give a weekly close above 355 rupees, and I'm going to enter the stock. So the target that we had calculated here was 936. Now this is going to be a pretty long trade. It's not going to be short term where you can expect to hit this target in a period of 3 months or 6 months. I believe this would take a minimum of 2 years to get hit, but I believe this 2 years wait is totally worth it for the gain that you are getting. So 355 weekly close. What did we identify? It's the highest net profit. Promoters are raising their stake. On verge of breakout of, it's going to break a high of what, 10 years. Oh my god. On verge of breakout of 10-year consolidation. Okay, now let's see what a stop loss would be in this case. Let's go to the daily chart and let's try and draw some sort of a support trend line here. Let's take this. Okay, so it's very close to its support trend line, so I believe this is a perfect price to buy it. Hmm. Nah, no, we are going to wait for it to cross 355 to go weekly close about 355, but our support line would be 305 rupees. That would be the appropriate support. So from the target entry price, that's a risk of 14% you'd be taking, but the potential gain is massive, 185%. So definitely a good stock to buy, and we are going to be waiting for the price to cross 355 for our entry. So that's it, guys. I think we are out of time now. So I hope you got to learn how I do chart analysis. The whole purpose of doing this video is to sort of relay how easy and simple chart reading is. And you don't need multiple indicators, you don't need anyone to tell you. You just need to open a free trading view account, use a free screener account. Look at these very simple things, because it's these simple things that make the biggest difference. Just look at the price movement, try and draw trend lines, try and identify any potential chart pattern, look at the shareholding pattern, look at the profits of the company. And if the company is fundamentally strong and technically strong, then you should go for it. Have no fear, decide your risk to reward ratio, and you will end up making a lot of money in the market. So I hope this was helpful. Again, just a quick disclaimer: please do not, treat this video as a buying or selling advice. It's only for education. Do your own research, and this Google sheet will be linked in the description, so you can go ahead and refer this whenever you want. I will keep updating this sheet with any new trades that we will activate once these breakouts are done, and you'll be able to clearly see how the trades are performing here. And if you have any questions, if you have any feedback, please feel free to comment down below. Thank you very much for watching this video. Please don't forget to like the video as well. Thank you.